Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for the 14th of April. I'm recording the video 5 minutes past 6 PM Eastern Standard Time. I was expecting downwards movement for Monday and I was expecting to see an increase in downwards momentum. That's not what happened. Price moved higher and very choppy overlapping sideways movement. We have a green candlestick on the daily chart. Upward movement remained just below the invalidation point, but I expect, because it's showing up on the daily chart, it's actually a small second wave correction. I think this should end early in tomorrow's session. A target for it to end with just a little bit more upwards movement is 1835.63. After that, I'm expecting to see the start of a third wave down, so we should see a beginning of an increase in downward momentum tomorrow. The target for that third wave to end remains the same at 1776, and it's probably a few days away. Let's have a look at the wave count at the daily chart level. The difference between the bullish and bearish wave counts is in the historical analysis, and you can access that on the historical analysis section linked to in the sidebar of the website. At the daily chart level, I want to explain these trend lines first. The dark blue trend lines are drawn around this upwards impulse of intermediate wave 1 using Elliott's second technique. I'm leaving it on this daily chart to show clearly that this downward movement did not breach the channel containing the first wave. We would expect the second wave correction following a first wave to clearly and strongly breach the channel containing the first wave, so it's unlikely that it was over here. The aqua blue trend lines are drawn using a classic technical analysis approach, and every day in the text article there are clear instructions on how to draw them. They have been held since 2011, repeatedly tested, and so they're very important. I expect that downwards movement for minor wave C may slightly overshoot the lower of this double trend line, but not by more than 3% of market value, which is just over 59 points at this stage. I expect we're going to see that overshoot because minor wave C is extremely likely to move beyond the end of minor A to avoid a truncation and a rear running flat. The lower dashed maroon channel is copied over from the monthly chart. It contains all of the upwards movement from its beginning in 2009 at 666.79. If the lower edge of that maroon channel is clearly and strongly breached, then the wave count would switch to being extremely bearish. That's the bearish differentiating line right there. At this stage, both the bullish and bearish wave counts expect that the S&P is within an intermediate degree correction, which is unfolding as an expanded flat, which should subdivide 3, 3, 5. I expect to see a completion of this 5-wave impulse down for minor wave C, which may last about 3 to 5 weeks. At this stage within it we have 1, 2, and now the third wave is extending and its second wave correction shows up on the daily chart. This is really, really typical. When third waves extend, their second and fourth wave corrections within them tend to show up quite clearly on the daily chart. This third wave will be longer in price and duration than the first wave, which was not extended. Let's have a look at how this is unfolding on the hourly chart, where minor B ends and minor C begins here, this point here. We have an impulse for 1, a zigzag for 2, and now 3 is extending. It will reach 1.618, the length of 1, at 1776. Within the third wave, this sideways and upwards movement for Monday's session looks most likely to be a continuation of this second wave correction because it shows up on the daily chart. So it wasn't over there, it's continuing sideways as a double flat correction. We have the first flat in the double labelled subminuet wave W. The double is joined by a 3 in the opposite direction labelled X. And here we have the second flat in the double, a regular flat for subminuet wave Y, A, B, and C is incomplete. C would reach equality in length with A at 1835.63. Only a little bit more upwards movement is required to complete the structure for microwave C. When this little second wave correction is complete, then the next movement down for this wave count expects a third wave within a third wave to unfold. That should have the strength and momentum to break through the lower edge of this base channel. Price should breach this trend line and then it should remain below it. We should see an increase in momentum for downward movement for the middle of the third wave to be much stronger than the momentum seen for the first wave. Tomorrow when markets open, I am expecting just a little bit of upwards movement. If it got that high, it should find resistance at the upper edge of this base channel. But technically the invalidation point must remain at the start of Minuet Wave 1 at 1872.53 because the second wave can't move beyond the start of the first wave. At the daily chart level, the bearish wave count does not diverge at this stage from the bullish wave count, and it won't diverge probably for months yet. We still need to see an intermediate degree correction complete, and then for the bearish wave count, more upwards movement and new highs for the very last final fifth wave up. That's all for me today with your S&P analysis, and I hope that all our members had a most fabulous weekend.